All right, guys, it's looking like we're going to get possibly a gap down and some headline updates, but that doesn't change the structure that we have been looking at for weeks. Let's just jump right in here to some market breadth, and I've got a couple ideas I'll share with you here today. Starting with the SPY here, we remain in a solidified downtrend. We still have not been able to take out any of the previous swing highs or lower highs, more specifically. And as we've been talking about since coming out of the May to October rally that we were in, which then went into a bit of a stall and a distribution cycle and now a downtrend, losing the daily, weekly, and monthly, all things we've been saying to look out for. Just know that that is the environment that we are living in, and any guessing from a swing trading the next 3 days to 3 months standpoint, you're counter trend. If you're trying to go long in a downtrend, you're a counter trend. That is something you must be aware of. All right, I don't do that. I ride the trend. Okay, I work with the momentum of the markets behind my positioning. So until we are able to take out a swing high, pull back, make a higher low, and then push back up through the area, more ideally beginning to build above, I could care less about upside at price action. I've been saying this. So when we had this 2-day little relief rally or up sequence, whatever you want to call it, right back into prior resistance under the 200, and then now we had the press conference of Trump yesterday come out, gap futures down. We're right here right now in futures. So what I want to say here is don't blame it on the press conference or the current administration. This is downside price action. You get relief rallies, and if they make lower highs, especially below the 200 and downsloping moving averages, guys, you should be looking for an opportunity to get short if you want to trade actively. If you would rather not short, well, then you need to be sitting on the sidelines from a swing perspective. 3 days, 3 months, we're in a downtrend. Don't go against the market. But if you're looking to trade this actively, then you should be looking for these relief rallies to short the lower highs and resumption of trend. So what do I talk about all the time? Trading the leaders in a trend backed by growing fundamentals that have structure, that are trending, making higher highs, higher lows, higher highs, higher lows. And my entry model, I'll show you here in the last rally that we have. You wait for a retracement, triple R, retracement, reaction, remount of the short-term trend. This is a triple R trigger candle right here. Okay, let me get that out of the way and let me zoom in. I'll do this quickly. I know a lot of you know, but some people may be seeing this for the first time. You are looking for a trend, higher highs, higher lows. Okay, and this one came out of a changing character. This is what we're looking for right now, guys. You had a corrective market, wait for it to change character, make a higher high on this last swing high. This was a swing high. First higher high was right here. We pushed up, higher low, pushed up, higher low, higher highs, higher lows. We are now in a trend, so you can start to apply trend continuation models to that trend. So you wait for a retracement, reaction, remount is the triple R, and you can see how well this works. This is just the index. You can roll this over into the best ETFs and companies in the world as well. I trade the leaders. I don't speculate in unproven companies. Okay, I'm talking about the best companies and ETFs, leaders, all that stuff. Okay, but guys, this is your trigger candle. But my point here is it's the exact same thing to the downside. You look for a downtrend, lower lows, lower highs, lower lows, lower highs. You wait for a rally, a counter trend rally, to be the retracement reaction at around our level. What's our level here? Well, you got the 200. You've got the prior support, which is now resistance. So it pushed up, reacts at or around our level, and comes back down through the 9 EMA. Can you guys see that? I'll zoom in. It is a trend, and you get a retracement reaction at or around our level and a remount of the 9. The 9 is going to be right here today. So you're shorting right back through the monthly support level that is now resistance that we're coming back down through. Your stop goes swing high to our target. Okay, that is the triple R, and it's the same thing to the downside. You can invert your chart and see it all the same. There's a lot going on this chart. It's starting to bother me. Okay, we're back. But that is what I want to say, okay? As a trend continuation or as a trend trader, it all works the exact same to the downside, and this is an opportunity, all right? I don't care what it came from. That doesn't matter. Yes, the press conference, right? And his talks of a few more weeks of war, whatever it may be, okay, but it doesn't negate the structure that we were in and the move that we were already looking for. I was saying don't short it in the hole. Go a couple videos back. Don't short it in the hole. Wait for a retracement, reaction, remount. Wait for a pullback and then the resumption of trend. You then have ground rules that you can risk off of. Stop, entry, to our target. Okay, that is trading with the momentum of the market, and it goes both ways. So guys, my analysis of the market can be pretty much summed up there in the SPY. The exact same look here in the Qs. You're breaking major structure, wait for a retracement, reaction, remount. It's reaction right in here back at prior support. Okay, if it reacts and then remounts this 9 EMA, it's a retracement, reaction, remount. There's your trade. Stop, entry, target. All right. And this rolls over into companies. Let's just look at it. All right. I am looking at shorting XLY, consumer discretionary ETF here. The idea is, the whole market is in a downtrend and we're in a corrective period. I am looking for shorts. So I'm looking for something that has lost structure, came back up, tests it, fails it, and rolls back down and resumes the trend. Entry, stop, to our target. Okay, something like that. But the discretionary is with oil being elevated, that's going to roll over to the consumer. Okay, it's not a big idea. It's not a me idea. It's just how things work. So I'm eyeballing discretionary as my next vehicle. Okay, so let me talk about, guys, Bootcamp. I might go live tonight. We'll see. We'll see how things look overnight. Right now, we got a bit of a sell-off on the news, but it's not that bad, to be frank. What are we down 1%? And futures, when we had I think a 3+% little rally there off of the lows in futures here, coming off of the lows of, I guess that was last Friday, and then yesterday's close, I think, let's see, what was that? 4% move, right? So to only be down, this is where we are. It's not a big deal. So here's my point, and why I might go live for you guys today, because I might take a trade. But I want you to think about what could happen here if we open on a gap down in futures. In the market, in the cash market. If we open on a gap down in the markets, and this goes for the XLY position I'm looking at or anything. If we open on a gap down relative to yesterday's close, which is up here, right? Well, I don't, you bootcampers, you know this. I don't want to just chase that gap down, because a lot of times you will see a gap fill on gaps in the market, right? If we gap down well below yesterday's range and close, then, a lot of times you will see that gap fill. So that is where I might go live. If we do get a gap down that gets bought up early in the session and it comes right back up, fills that gap, and it starts to roll again, well, at that point, the 9 EMA is going to be right about there, okay? And, it's going to be a red to green roll with the gap fill reversal. A lot of things are going to align that I will probably be willing to talk to you guys about live, because I'll probably be taking a position in a move like that. But the alternate, or guys, that I'm always building multiple scenarios. The other scenario would be a gap and go, where I might get jumped. It's the world we live in. We're headline sensitive environment. If I get jumped on what is actually a beautiful short, then it is what it is. I'll wait for the next one. So that would be another scenario, is we gap down and it just goes and it never gives me an entry. Another scenario would be it gaps down, it goes, and it comes back up and it fails that level. I would then look to initiate shorts through low of day. All right, so that is just in a nutshell what I'm looking at. You guys in Bootcamp know what I mean by all of that, and I'll look to do it live here. If it feels like I am going to enter, I'll switch something on. We can do it in Discord or something. I'll go live and I'll share my screen and talk through all of that. But just know I'm looking at XLY. So that could look like here on XLY if we do get a short off on this. Say we gap down. I just don't know, right? I don't know. Will we gap down below the day's range? Okay, that matters, because if we do, then you have the gap fill that might happen, okay? And if it fails, then I'll roll it through the open price. Yeah, we'll see. We'll see. I'll talk through this stuff live. But again, if it gaps down here and it just rolls, then, unfortunately, due to headlines and the macro environment, I got jumped on what's just a beautiful trend continuation entry on a retracement, reaction, probably a remount here today of the 9 EMA. Entry, stop, target. All right, that rolls over into a lot of things. And I made a video yesterday about the economics of war, and this is a thesis that I'm working on myself. It's become very clear to me that the economics of war are shifting. You've got $30,000 drones taking out deca-billion-dollar assets throughout the Gulf region. And that matters, okay? That's a fundamental shift in tactics and logistics, all of the things. It matters. It's the economics of war, and the solution is currently being built and it's being deployed, and it's direct energy weapons. So guys, I made a video on that yesterday if you want to go check it out, but I have a lot of names that I'm interested in in that space, but it's the aerospace and defense sector. And we've got some names here like RTX that, did decently yesterday. Yeah, you got a triple R hit retracement, reaction, remount. But you must remember the macro environment. So we're fighting against the market here, even though this is a little bit of a sector sort of where energy is going to all-time highs because of the macro environment, because of the situation we find ourselves in currently. Well, this is aerospace and defense in the middle of a wartime and a shift in war economics. This stuff is interesting to me. Go watch that video yesterday. It's a different thumbnail than you're used to seeing. It should stand out on the channel. I think there's some really good ideas in there. Looking at a couple more of these names. Yeah, some of this stuff is starting to look pretty attractive on the weekly chart. Look at this. What is triple R? Does it work on the weekly, on the monthly, longer term stuff? Yes, of course. I'm an active swing trader 3 days, 3 months. I'm typically trading the daily. I'm also an investor. So I roll the triple R model down all the way to a monthly chart and triggers. Fantastic time to be acquiring the best companies in the world if they trigger on the monthly. But here's a weekly triple R, okay? It's a strong company in a trend backed by growing fundamentals or a catalyst. Both is better. This has both, okay? You're getting a trender, holding structure, breaking out, pulling back, retracement, reaction at around our level. What's our level? Prior highs, okay? Reaction right at it, and then a remount of the 9. So there's your entry, there's your stop, and your 2R target, okay? So, that's a trade idea if you guys are looking for those, but that sort of goes throughout the entire aerospace and defense, more specifically direct energy weapons. I'm talking about laser beams and microwaves. Look it up, watch that video yesterday. But guys, that's what we're looking at here, and, of course, I did just mention the triple R on a monthly time frame. I'm starting to get more people in my orbit, and I'm taking calls here and there, and people want to know, like, does this work? I don't want to be an active trader or swing trader. I'm more of I'd like to time the market better or just find better entries into the best companies. Well, here's Google. You should want to own Google if you're an investor. Well, when the hell do we get into this thing? Okay, well, triple R on the monthly. There you go. There's some good times. Triple R on the weekly. Well, there you go. There's some good times. It's just retracement, reaction, remount. Retracement, reaction, remount. Let's see here. We're looking at, ooh, baby. We're looking at a possible one here on Google on the weekly. Retracement off of highs. Macro environment is bringing Google off of its highs. Back over this 9 is pretty attractive here, you guys. Yeah, but do, of course, remember that we are in a bear market, so you need to size properly for that reality. All right, we are in a downtrend. You're fighting the market. You are fighting the market. But, from a longer term standpoint, buying Google, Amazon, all the stuff on, monthly, weekly triple Rs historically has been beneficial. It's been good timing. Good timing, we'll call it that. Guys, I've been doing a lot of calls and videos today. I feel a little spirally. I think that's enough. Let's see what we get out of the market today. I'm considering, I probably won't do anything more than a quarter size of a single unit, especially if it's not like my ideal entry. What I really wanted was another up day or two in the SPY, like Wednesday, Thursday up days. Let's go here. Getting us right up into the 200s, stuffing there below this weekly level and then rolling back through all of it. I would have really, really liked that. And then my stop would have been, at that point above the 200. That would have really been ideal, but it looks like we are getting a gap down. So pre-market did just open. Let's check out some things here. Yeah, okay, so here's my drawing. This is what I meant earlier for anyone that made it this far in the video. This is what I'm talking about. Imagine the market just opened and I want to go short. Here's the 10 minute. I use a 5, 10, 15 minute to watch the intraday price action, okay? But I'm trading the daily chart on this specific idea. It is the daily trigger. Retracement, reaction, remount, triple R to the downside is a trade idea. So let's expand this and show you what I mean. How I wouldn't just buy the opening tick. Now I'm short the market, okay? Because again, a lot of times this gets filled and then it rolls back down through and over. Well, what is it rolling through? Pretty major level there. The monthly support level, okay, the 650, that's a psychological level. There's different things, but guys, let me end on this, all right? If we push up, close the gap from yesterday's lows at least, and it rolls back down through, I'm going to be looking at that. And then I have a very simple stop and a very simple target, okay? That's my trade. It's 2R, okay? Once we get to 1R, especially in this market, my stop goes to break even. Okay, my stop goes to break even. So we'll look at that. And then again, the other thing that I said, let's get some of these other lines off of there. The other thing, say this is our opening print. Oh, one more line. This is our opening print. If we rip and just sell out of the gate and it just can't catch a bid, then I missed the trade. It is what it is. Okay, the other option would be we open, we sell off out of the gate, and we come back up. All right, maybe fail the open price would be really attractive. And then if it rolls back down through, I'm going to consider taking it through low of day. Okay, so these are things I'll talk through, you guys. And then the other thing that you must watch out for is just remember the administration does not want the stock market to go down. All right, so, you know, the hourly trend has changed here. No, it didn't. No, it didn't. Well, I would say this was an hourly high here. If you include pre-market. Let's go to, yeah, this is fine. So the hourly trend has possibly changed here. So what could happen is an hourly high or low as well, and we start to push back up. All right, that could still happen, but obviously that's why we have stops in place, and we can't predict everything, guys. All right, at the end of the day, if the market does what I said, if it fills the gap and rolls back over, I'm likely to apply some controlled risk and look for a 2-hour target. It does not feel like the situation is over in the Middle East, and I think things might get heavy again because, you know, when you zoom out and you start looking at structure, guys, we've lost the daily, weekly, and monthly. Very likely to recorrect back down to prior cycle highs. That is historically what we see, and that would only be about I think it's 10% correction, 11% correction off of all-time highs. Guys, this is fine. This is okay. And that shouldn't blow you up. So if you did not know how to spot this changing character, this distribution, and start to raise cash and do less from an upsided trend continuation trading, I'm trying to buy things that are going higher when the market is beginning to roll over. If that's the kind of things you've been doing the last couple of months, consider learning market breadth, okay? Consider working with someone. I do have an offer. Check it out. I would love to work with you and teach you proper timing, proper risk management, and 6 models that outperform the market. That's all I have to say today, guys. Stay safe, manage your risk. Might go live today. Maybe we'll make some money. I'll see you soon. Bye.